So for our first panel discussion, which is about financing a low-carbon economy, we're very lucky to have industry experts talk about a matter crucial to Hong Kong carbon neutral 2050 goal. Hong Kong is striving to achieve carbon neutrality by 2050, and this panel will be exploring the role of Hong Kong in facilitating and attracting private capital into the decarbonization of Hong Kong and the wider Greater Bay Area. So joining these discussions, we are honored to have our moderator, Ms. Ivy Lau, Head of Sustainable Finance at Mizuho Securities Asia Limited. Let's welcome Ms. Lau. Ms. Lau, please. And also for our panelists, they are Mr. Dixon Wong, Head of Financial Services and Global Head of Family Office, Invest Hong Kong. Welcome. And next we have Ms. Hester Marie de Caspert, Regional Head of Operations, East Asia and Pacific Head of Office, International Finance Corporations. Welcome. And next we also have Mr. Mervyn Tang, Head of Sustainability Strategy, APAC, Schroeder. Welcome. And last, we have Ms. Pratima Divgi, Regional Director, CDP, Hong Kong. Welcome. So, moderator and panelists, the stage is now yours. Thank you.
Good morning, everyone. So in the next 45 minutes, we will discuss the topic financing a low-carbon economy with a focus on Hong Kong and the wider Greater Bay Area. Climate action in Hong Kong are gathering steam. The Hong Kong Climate Action Plan 2050, announced weeks ago, unveils the Hong Kong government's plan to deploy US $240 billion in the next 15 to 20 years to implement 4 major decarbonization strategies, namely net zero electricity generation, energy saving and green buildings, green transport, and waste reduction, and take forward various measures to mitigate and adapt to climate change. Also, we've seen the Chinese government announce a few days ago that there is a guiding document on the country's work to achieve carbon peaking and carbon neutrality goals under the new development philosophy with some specific targets and measures for the coming decades, which also require tremendous amount of investment. So in this panel discussion, we are going to explore the role of Hong Kong in facilitating and attracting private capital into decarbonization of Hong Kong and the wider Greater Bay Area. So let me start by asking Dixon, as we are all aware that one of the drivers for the development of sustainable finance is regulation and policy. So Dixon, Invest Hong Kong as an investment promotion agency, your role, I'm sure, involves a lot of explaining to overseas investors the benefit of expanding their footprint in Hong Kong. So could you talk us through some of the major policy measures that the government, put forward, to attract more investment coming to Hong Kong?
Sure, thank you, Ivy. I think I just give a very quick summary of, the key or major policies, measures on carbon neutrality from the Hong Kong SAR government perspective. As highlighted earlier by Mr. Joseph Chan, the Chief Executive announced in the 2021 policy address in October that Hong Kong will strive to achieve carbon neutrality before 2050. So based on the Hong Kong's Climate Action Plan 2030 plus announced in 2017, our city is moving towards the 2030 target of reducing carbon intensity by 65% to 70% compared to 2005. To reduce carbon emissions, the government has taken a number of measures in target areas such as green transport, waste management, energy supply, cleaner production, and in particular, green finance. To promote green building, the Energy Saving Plan for Hong Kong's Build Environment 2015 to 2025, promulgated in 2015, set a target of reducing energy intensity by 40% by 2025. So far, the energy intensity in Hong Kong has decreased by over 30%. So in terms of promoting green and sustainable finance, the government has some working groups and also schemes recently set up in the financial services industry. I think Joseph has highlighted some of it, like the steering group, the stage, and I will explain each of these, including the green and sustainable steering group, Hong Kong MA grant scheme, as well as the stock exchange stage. So as regards to the promotion of a green and sustainable finance, the cross-steering group, the cross-agency steering group, actually was inaugurated in 2020, promulgated a strategic plan in December 2020. The members of the cross-agency steering group include the Hong Kong Monetary Authority, the Securities and Futures Commission, the Environmental Bureau, and of course the Financial Services Treasury Bureau, the Stock Exchange, the Insurance Authority, and Mandatory Provident Fund Authority. The key objectives of the Cross-Agency Steering Committee is to coordinate the management of the climate and environmental risks to the financial sector and accelerate the growth of green and sustainable finance in Hong Kong. As a leading green and sustainable finance hub in Asia and broadly globally. So also it facilitates the regional cooperation, and including in the Guangdong, Macau, Hong Kong, Great Bay Area in particular. So in July 2021, the cross-agency steering group announced that the priority will focus on climate-related disclosures and also sustainability reporting, carbon market opportunities, and the launch of the new Center for Green and Sustainable Finance. So that's about this cross-agency steering committee. In addition to that, I think Hong Kong MA Grant and Green and Sustainable Finance Scheme has also commenced from May this year, and it will last for 3 years. The launch of the grant scheme is to support green and also sustainable bond issuance and lending, which will further enrich the green and sustainable finance ecosystem in Hong Kong. Under the grant scheme, it will subsidize the costs for eligible bond issuers and loan borrowers in 2 particular areas. One is the general bond issuance costs, which in short, it will subsidize expenses incurred by the first-time green and sustainable issuers, including the audit, the legal fees, as well as the arrangement and listing fees. The other one is the external review costs. The external review cost scheme will subsidize the full cost, the whole entire amount of the eligible expenses up to a maximum of 800,000 Hong Kong dollar per bond or per loan. So last but not the least, about the Hong Kong Stock Exchange Sustainable Green Exchange, which we call it in short the stage. The stage was launched in 2020 December, being the first Asia multi-asset sustainable investment platform, supporting fast-growing and also the global demand for sustainable finance in the region. Collaboration partners include, United Nations Sustainable Stock Exchange, the World Federation of Exchanges, CFA Institute, Climate Bonds Initiative, and also the Hong Kong GFA in particular as well. And I think some key numbers for a reference is the US dollar $260 billion global green bond and green loan issuance in 2020, And in Hong Kong, it's 26 billion cumulative green bonds arranged and issued by 2019. 28 billion US dollar raised by sustainable green social transition bonds listed on the Stock Exchange of Hong Kong as of 31st December 2020. So I think all these numbers, as you can see, the potential growth, the sustainable finance space in Hong Kong. So to this end, the Council for Sustainable Development under the Environmental Bureau proactively collects views through the public engagement on a long-term basis decarbonization strategy. Dialogue is still underway with various professional bodies on possible ways to achieve the carbon neutrality. I think I stopped as otherwise too long.
Thanks for the comprehensive overview. So I think with the policy support as a Kickstarter, I think it's equally important to mobilize the private sector at scale and speed. So my question to Pratima. So I understand that CDP has been running the global disclosure system and engaging actively with these private sector companies. So my question to you is, how does Hong Kong, compare with other cities in the region when it comes to, carbon disclosure? And what are the challenges they have to tackle in order to leapfrog in the decarbonization journey and, any incentive or policy measures that you deem necessary?
Thanks, Ivy. And thank you, Tony, for the invite today to speak. I'm going to put that question in the context of Hong Kong's ambition, which is to be the Green Finance Center for Asia, right? So that's, in that context, the opportunity for Hong Kong is not just Hong Kong, it's all of Asia. For CDP, we have currently about a little over 3,000 companies as of last year that responded to our questionnaires, which is essentially a standardized format of the Task Force for Climate-Related Financial Disclosures framework, or the TCFD framework. And the reason why we've standardized this is because if we don't have that information on a like-for-like basis, it's not going to move finance. And we need the lever of finance for this transition and this, very ambitious target that we are all setting for ourselves over here. Going back to your question, amongst these companies, amongst these 3,000 companies, the ones that we consider best practice today, and we sort of give them a scoring, it's about 4% of the pool. So it's a tiny amount. But I think the encouraging bit is the fact that they've started the journey. And the reason why I put it as a journey is because I think if you look at this as a reporting exercise, if you look at this as a communication exercise, you're not going to get where you need to go. And the simple matter is, if you look at the TCFD framework or any of the ESG frameworks for that matter, they are all a strategy exercise. You can take the TCFD today and you can slot it under the requirements of your enterprise risk management framework, and it will fit in very neatly. The Hong Kong Monetary Authority, I think it was in early 2020, they came out with a really simple paper on climate, where they linked up climate risks to existing banking risks. So this is not something that you have to tackle entirely new. It's within your existing risk framework. It's within your existing opportunity framework. The requirement is to get started and to assess where that is, to reduce or mitigate the risks where you are, and to arrive at the opportunities that you're setting for yourself. Companies today, of these 3,000 in Asia Pacific, 2/3 of them have identified today physical risks and transition risks to their business. So this is today. This is not something that they're still trying to fact find. They're able to identify these risks on the basis of what they expect in terms of the next 3 years, in the next 5 years, in the next 15 years, and so on. So there is a timeline to this. They're able to put in whether for their internal operations these risks are significant or not. I think the question more is they're unable to, at this point, For risks that are beyond 5 years, what is the financial significance of that risk to their internal operations or to their supply chains? So I think that exercise is already ongoing, and this is where the finance really needs to come in and work on it. I would say the financial sector has been a little bit behind in terms of the corporate sector, which has been working on this either through investor pressure. But the translation of all of this varied information into financial opportunity has just about kick-started. And so I'm hoping that the next 5 years is really where this gets settled in.
Right, so my next question to Hester. So I understand that IFC, has been dedicating a lot of efforts to provide practical solutions and, funding innovations to your, to create bankable projects while attracting private investment into emerging economy. So now you're based in Hong Kong. So is there any experience that, Hong Kong can really learn from? And could you share with us your work and collaboration with the Hong Kong ESG community?
Sure. Thank you, Ivy. And thank you, Tony, for the invitation. It's a pleasure to be here. I think just first, for those who don't know the IFC, we're the private sector investment arm of the World Bank Group. And we are the largest investor in private sector in emerging markets globally. The World Bank Group is also the biggest financer of climate action activity on mitigation and adaptation globally in emerging markets. So that's kind of the context for why we're here. We have a hub office here in Hong Kong, but we don't invest in Hong Kong itself. So I think there are a lot of lessons that Hong Kong can draw, everyone can draw from the experience of emerging economies that are making their way on a net zero path. First of all, because I think there are very few countries globally that are really ahead of the game at this point. We're all starting from a fairly low base. IFC has made climate finance a cornerstone of its activities globally. We have a commitment now that 85% of all of our investment by 2023 will be Paris-aligned, 100% by 2025. And we're focusing on a couple of key systems that are really generating the bulk of greenhouse gas emissions. And those are, you're probably familiar, energy, land, food, water, and agriculture, transportation, cities, and manufacturing. So as we work in developing economies, the sort of the four, I guess, guideposts that I would say that we've found are essential for developing an ecosystem for sustainable finance and investment on decarbonization and net zero pathways. And which I think, as I go through these, you'll see Hong Kong has a lot of these already, and as my panelists, co-panelists have elaborated. The first of those is a green-friendly regulatory environment. And Dixon elaborated a little bit on some of the progress Hong Kong has made in that respect. But you need clear rules of the game for private sector players. People have to know what the targets are. They have to know what the opportunities look like. They have to know what the disclosure requirements are, what kind of reporting they have to do. So that's very, very important as a foundational element. I think then you need to have an ecosystem that supports innovation in all stages. So a good VC, kind of a venture capital market, but also the ability, once those technologies are developed, to invest in them and scale them. So Hong Kong has, I think, both of those things, plenty of incubators and universities and systems to promote innovation across all kinds of sectors, not just in digital. But then Hong Kong also has the capital markets and the financial infrastructure to really invest in and scale those innovations and those technologies when they get developed. The third piece is bankable projects. And I think this is really the big obstacle that we face across the developing world, but I think it's also true in developed economies like Hong Kong. There's a lot of money chasing very, very few kind of ready-to-go green investments. And our role, IFC's role as a multilateral, is to try and create the enabling environment, work with governments, work with municipalities, sectors, to create the enabling environment for investment in new places. Then to invest and put our own capital into pilot projects and create a demonstration effect in the market. And then we would provide, let's say, de-risking tools for other company or other investors who want to follow us on this pathway. And then finally, the sort of the fourth element is financial innovation. And I think financial innovation is something that Hong Kong, again, is very well positioned to do. The green bond experience of Hong Kong that the Undersecretary described is a good example of that. But green bonds, I think now, that's an established market. The targets that Hong Kong has set are very laudable, and there are a lot of new areas now that it would be really exciting to see Hong Kong lead on. So areas like the blue bonds, sustainability-linked bonds, social bonds, and then there's also sort of climate transition finance tools that are being created for companies that are not necessarily going to qualify for a green bond. They're too dirty. The industry is not sort of not at that level yet. So those tools are being developed. We need to see more of them. We need to see education around them. The same kind of process that took place for green bonds that took more than a decade, we need to see that again for all of these new tools, but at a faster pace. So I'll stop there. Thank you.
Thank you, Hester. I think I'm going next. I'm going to get some investor view. So, Mervyn, you've been working in a global investment, sector. So, I would like to, pick your brain on, based on what just Pratima and Hester shared, that it seems that right now we are also facing a huge challenges, identify bankable projects, not only in Hong Kong, but also in the region. And also, just now, Pratima mentioned a very important point that, in terms of disclosure, it seems that we are still have room for improvement. So, from an investor point of view, when you identify green investment or sustainable investment, what are the major challenges and what are the opportunity at the same time? And because based in Hong Kong, we've seen a lot of investment companies here. So, could you share with us some of your views?
Absolutely, and very glad to be here. So maybe taking a step back and think about what investors like us are trying to do. So we're not just looking at this from, we want a tick box on ESG and be green. The real reason for looking at the disclosures that you will make is to understand what business models are long-term sustainable. How are they going to respond to changes in carbon pricing and other policies? What potential risks are there as well as opportunities? And so to do that, we need the raw data, which CDP very much helps to push with, say, Scope 1, Scope 2, Scope 3. But it's not just that as Pratima says, it's not just a number. We need to we're trying to understand things behind it. So kind of one example would be a lot of companies and countries are setting net zero targets. That's all very well and good, but to really understand the business model impact, we need detailed and costed plans. We need to understand what investments they need to make. What do they need to substitute? Will they be passing some of those costs to their customers? So I think with all that, it's I think you we talked about ESG ratings when we were on the table. There's a lot of information out there trying to identify what is sustainable, but it can come from very different perspectives. And so there's various studies of how different scores and ratings have different methodologies. I think there's a few kind of common differences, which means that I think if you look at the correlation between a lot of these ratings, it's just a very frenzied scatter plot. But why are they so uncorrelated? So it's partly to do with what metrics they choose. So simply by having, let's say, not choosing scope 3 as a weighted variable versus scope 1 and 2. So scope 1 being direct emissions, scope 2 being indirect, scope 3 being value chain emissions. Like, just by what metrics you decide will change what your score outcome is. Then what weight do you put on particular metrics and issues? Because if I think Tesla is a very well-hashed example where there is clearly a lot of environmental benefits, but some significant questions on governance. Now, depending on how your weight that you place on that rating for those issues, it's going to differ quite a bit. Then you have, I think, just the actual aggregation methodology, which I just not to over detail, but like something like MSCI does an industry relative score, whereas something like Sustainalytics is more absolute. Then suddenly your whole basis of comparison is different. And so I think what that means is you hear so much about, it's like people assume that there is a clear definition of what is sustainable and what is not sustainable, and I don't think that's the case. It will depend on what perspective you're trying to look at. I think that's why Schroders and I think a lot of other investment managements have taken a proprietary approach. We use third-party data, we use third-party scores to get a particular perspective, but to answer specific questions, we need our own analysis. And so, kind of now going back in Hong Kong, okay, how do we find opportunities and risks? And I think it's clear that kind of with the lack of bankable projects, that there's only so much based in Hong Kong. There's only so much renewable projects. But I think it's worth thinking that actually, if from an investor's point of view, if we're thinking about what will benefit or be at risk at the low carbon transition, is not just the energy projects. It could be, let's take real estate, where it's clearly a big part of Hong Kong. There is green buildings and the quality of energy efficiency of real estate itself. And then you have to think about the value chain of that whole real estate industry. So insulation materials, Hong Kong has a lot of industrials. Okay, they will benefit in a world where all these buildings are being retrofitted. There's hydrogen boilers there as a future technology. There is smart meters. There's lots of other things that can help the whole value chain in energy efficiency. And we can't just look at the obvious projects as an investor. We need to look at the whole broad set. The same with, I think, financial institutions. Hong Kong is clearly a leading leader in the financial industry. If we just look at a scope 1 and scope 2 emissions for financial institutions, it's minor, it doesn't matter. What ultimately matters is their scope 3, what is in their portfolio, what are they financing? And the financial institutions that are proactive, that have a good strategy to actually take advantage of this, the future growth of green and related projects are going to benefit. And so I guess, I think the takeaway I want to have is, don't just think of green opportunities as the obvious, but look broader into just what the system-wide change that will be needed for decarbonization.
Dixon, so Invest Hong Kong has been driving the promotion of ESG investment, and I understand that you've talked to a lot of private wealth fund and family offices overseas. So, do you find the similar challenges that Mervyn just mentioned, and in particular, what sort of approach that those family offices will take when assessing the investment opportunities in Hong Kong?
Sure. I think, for your information, Invest Hong Kong has recently set up a new team, which is the Family Office Global Team. Apart from Hong Kong, we have executives helping investors from around the world from an FDI perspective to set up the presence here. We also help promote not just on investment, wealth generation, but also on the ESG element. Which I keep receiving a lot of questions on that, in particular from the private wealth management business and also the family office space. So I agree with Hester that Hong Kong has very vibrant capital markets, not just equity but bonds. And also agree with Melvin about it's not just a tick box; it's actually an education process. So we just started at Hong Kong MA Stock Exchange. Green Finance Association are doing a lot of work on this. So we work together to generate the synergies that we can help the investors to come over to Hong Kong. to help them on board here easily, smoothly, and efficiently. And in fact, the investment appetite, I think, of these clients, private wealth business and also family office clients, expanding so much. And that is an increasing, interest in the environmental, social governance, we call ESG, right? And impact investing. And in particular, from the European investor perspective, they are much slightly advanced than us. So they raise a lot of impact investing questions here. What's the investment environment in terms of the ESG in Hong Kong? So I think is a very good atmosphere here because we are not just in promoting Hong Kong as capital markets, but also an ESG ecosystem. But to quote some of the numbers, I think it would be helpful to get an understanding based on the findings of a report published by PWMA, Private Wealth Management Association, and KPMG. Observations on the level of AUM, the asset under management in ESG aspect. So currently, most private wealth managers allocated around 10% of their clients' AUM to ESGs. So the report findings indicated that expected in 5 years' time, more than 40% of those wealth managers, including private banks, will allocate 20% at least of the AUM to the sector, while around more than 25% will allocate more than 30% of to the AUM aspect. So I think based on these numbers, you can see the ESG investment has taken up an increasing important aspect in the private wealth management sector and family office sector. We as a team, family office, global family office team based in Hong Kong, and also apart from Hong Kong, we have individuals in mainland and also Europe to help drive the family office investors coming from the region to Hong Kong, and we will continue to do this sort of education and also help promotion of ESG aspects to these investors.
I think, next question would be, we've talked about challenges, we've talked about opportunities, and I think right now we are at a stage that we have to, the development of sustainable finance, sustainable investment have to level up. But before we can level up, we need a lot of talents. So there are media coverage, talking about the war for talents, and we need a lot of talents in order to secure Hong Kong's role as a regional green finance hub, a sustainable finance hub. So I want to, ask my fellow panelists, what are, your thoughts on, what sort of skill set or expertise do you think that we, in Hong Kong, we really need to, in order to scale up the development here in Hong Kong? Mervyn, go first.
Yes, absolutely. So I've been hiring in Hong Kong and globally for ESG for about 5 years. It's difficult market, not because necessarily just the lack of talent, but it's a musical chairs out there, huge amount of demand, huge amount of job seekers. It's it's really kind of a diverse pool of labor, and there's just hot demand everywhere. So the moment you find someone good, you have about 3 or 4 bids on them. So I think what I find interesting about the ESG talent market, it's a far more diverse one than maybe the traditional financial market, because you have experience from a lot of different pools. You have NGOs, you have environmental scientists, you have climate experts, then you have the kind of financial end, people who are used to direct transactions or research. And the goal of, I think, the industry is to direct capital towards sustainable causes, and you need these people, you need these groups to work together to really be able to make that successful. And so I find what I end up looking for is people who can, who have an expertise in one of those areas, but also being able to bridge that gap. And I think it's. I think what that means is I don't think the talent pool shortage issue is a Hong Kong issue. It's a global issue, absolutely. And I think the way to get around it is to really, again, getting people to develop that multidisciplinary lens, because again, I think ESG is such a broad topic. It's you really can't be siloed in a particular issue. And I think because it's also evolving so quickly, you need people who can think about how the system can change and what it will look like in the future, not just a great understanding of what things are like now.
Hester, any thoughts?
Yeah, I agree with everything that Mervyn has articulated there. I think what I would say about the skills gap in ESG is that it's, well, first, we have to think about it not just as a cohort of people who are trained in ESG, but ESG skills and literacy and sort of comfort with ESG data has to be very, very broad. It has to exist at the board of directors level. It has to exist in the finance department with decision makers and with employees at all levels. So just a level of literacy in ESG, I would say, is a huge imperative for all businesses. Hong Kong is relatively better positioned than a lot of places right now in terms of its talent pool, which is great. But I think this advantage is probably temporary. The demand is so strong, and soon the supply will catch up to meet that demand. My concern where I sit is that, BlackRock and Morgan Stanley, they'll never have a problem attracting really great ESG people. And cities like Hong Kong will never have a problem attracting those talents. But where we really need ESG expertise and creativity and thinking is in markets where those sort of capacities don't exist right now. So you need to decarbonize in developing markets. You need small businesses to be able to think about supply chains and how to manage their footprint. But if we can't get those skills to those companies and those countries in a timely way, we won't be able to solve this crisis, essentially. So when I think about Hong Kong and skills, I think about this as I do about Hong Kong in general around sustainability. This is a beacon, it's a light, it's a leader, it's a source of innovation and a place where people can come to gain skills and then go out into the broader, I would say, emerging world and apply them. And I think, that's what I would.
And Fatima, you look after the regional business at ADP, at CDP. So, do you think there are any collaboration with the neighboring cities that we can address the talent gap issue in Hong Kong?
So I think as Mervyn mentioned, it's not a Hong Kong issue. It's a fairly systemic issue. I think just to pick on Hester's point, because I think that was particularly pertinent, and that applies to Asia as well as the Greater China region. The important point is we have, just to give a CDP example, we have today about 200 multinational organizations that are engaging with their supply chains on their Scope 3 emissions. What that means is they are asking for this information today out of the suppliers that typically reside in developing economies, because they have figured out that there could be unseen physical or transition risks within supply chains that they are not capturing, but which would be very crucial to their business operations. So that fact-finding has already started. What CDP typically does is goes to these multinational organizations and says, don't ask for the full comprehensive data, because they don't have the resources to start with it. And even if they did, they don't have the financial resources to go hunting for this. So let's start on a step-by-step basis. What are, from your supply chain perspective, what are your top 3 priorities or 5 priorities or 10 priorities that you want information from your supply chain? And so that information has started, that education in the background has started. We have a couple of supply purchasing organizations, as we call them, or the multinational organizations that are already working with financial institutions to see how they can incentivize the suppliers to do more in terms of either providing the information, or if they have set certain targets for them, to enable that transition level financing so that they're able to actually meet those targets. The bigger issue for me today is probably the fact that you have a lot of universities today and you have a lot of educational centers today, and if you look at the educational programs that they have, I'm actually not sure how much of that is actually linked to sustainability. Like if you had, and I realize this is going slightly off topic, but essentially what that means is you could have people coming out of business schools that are not essentially linking the interconnectedness of ESG and sustainability within finance or within marketing or what have you. So you have a whole group of postgraduate students or graduate students coming into the companies and then having to relearn all of this. And something's got to get fixed over there sooner than later. And I think that probably is a bigger issue right now than the fact that, the companies and what they're doing. Because I think companies in some shape or form have already started on this education journey internally.
100% agree. I think the academic institution in Hong Kong has a role to play, in terms of capacity building and maybe redesign their curriculum. And I think another role that the academic institution in Hong Kong could play can be related to technology, because we are not only facing the talent gap, but also the technology gap. As we all know that the success of decarbonization really hinges on the technological advancement. So my question to Dixon, so what are the initiatives that is taking place in Hong Kong that you think can facilitate or to narrow the technological gap in order for us to really speed up in the decarbonization journey?
I think to share with you one of the good news, in case you are not aware, as announced in September, the Hong Kong University of Science and Technology has the plan to launch a new degree program in sustainable finance. So the course will start from 2022. So next year, September onwards, there will be a first bachelor degree in sustainable finance that will help equip the students with the necessary knowledge, skills, and hopefully to fill the gap that currently we have. And in particular, addressing the sustainability, climate changes, finance, and also technological aspects. So this will certainly, I think, will meet some of the increasing demand for the talents to address the issue. And also, there are, in fact, a number of, my understanding is the CPT courses, Hong Kong GFA, PWMA, Hong Kong SI, there are a number of courses relevant to ESG aspects, which will carry the accredited points for the full-time practitioners in the banking or finance field. So to help them to get more advanced knowledge in the ESG space, apart from getting the CPT points. I think so there are quite a lot of these courses available, and the new degree program, I think, will help close the gap.
And in terms of research capability, is there anything that perhaps you can share with us?
My understanding, I think actually in terms of research, we have the Hong Kong STP, but I can't speak on behalf of Hong Kong STP, right? But my understanding is there's a fund founded in 2015 under the Hong Kong STP. It gives the early stage Hong Kong technology startups a chance to also develop their innovative and research ideas and create some sort of a revolutionary view and on the tech products and services. So I think that there's a particular fund as well as research on the research aspect of this. So for the startup, I think this is also relevant on the research piece.
Thanks for sharing. I think now we have 5 minutes for questions from the floor. Where is the microphone? I think we can have time for 1 to 2 questions from the audience. Anyone?
Thank you very much. My name is Masaru Yarime from Hong Kong University of Science and Technology. And I think many of you mentioned about the importance of data. And increasingly, stakeholders are expecting data to be disclosed and open and accessible so that anybody can see the data and they check the data and they make analysis. So what do you think about the possibility of opening up all the data about ESG activities for transparency and also for sharing and for analysis in the society?
I think this is a question perhaps Mervyn or Pratima can address.
So we have data that links with certain privacy laws, which is all across the world. And in terms of compliance, we have to comply with these laws. The data also gets particularly sensitive for supply chains because you could have 2 or 3 buyers who are buying from the same supplier, and the percentages within that can be directly linked to carbon emissions, for example. So there's sensitivity to that data. What we do is, where the requirement of the data requires to be private, we will maintain that privacy. Where it's required that this level of analysis can be anonymized and provided to academicians or think tanks, we provide our data to the UN. So we do what we call as a public license. So it's not the full extent of the data, but the data is sufficient enough to draw your own analysis and conclusions out of the information that we provide.
I'll just maybe add, when we say ESG data, it's worth mentioning there's just a huge amount of different types of data. There's publicly disclosed data that companies do because in the annual reports or sustainability reports. There is government data sources that we might use, let's say collections on data on fines or certain other regulatory elements. There could be unconventional data, so geospatial data, that means maps, sometimes that's paid, sometimes that's unpaid. And so when we talk about ESG data, it's an absolutely huge spectrum, of which some is much easier to make public and kind of readily transparent, and then some is not, as kind of Pratima said.
Thank you.
Just to add on that, I think from an investor's perspective, when we work with companies, we require a certain level of disclosure in order to work with us as a development finance institution. Partially, our shareholders require that. But I think what we've experienced is that it's companies that actually want to take a leadership role and be at the forefront and innovate and actually gain competitive advantage. They're much more open to sharing and disclosing and being transparent about their data, because I think what we've seen is really this industry is starving for transparency and for data. And so those companies that actually can do that, they'll lead the way, and they'll, I think, gain a competitive advantage in the long run.
Thank you. We've got one question over there.
Yes. Thanks very much. My name is Thomas Tang. I actually work at one of the universities, and I concur with what you said about the education bright young graduates, getting young graduates to come out, with the right knowledge and skills to tackle, some of the problems, the challenges that you just mentioned. But my question is not related to education. It's really directed perhaps at Dixon and Hester, because you talk about financial products. China's doing carbon trading on quite a significant scale, and they're starting to build that up in momentum. What is Hong Kong doing about it?
I'll answer maybe a piece of that question. So my understanding of the way the carbon markets have evolved in mainland China is that these are, it's a controlled experiment of sorts. And What we want to see and what I think Hong Kong is doing or exploring with some of the other cities in the Greater Bay Area is a voluntary carbon market, and that it would be open to international investors as well. And so I think if Hong Kong is successful in launching this voluntary market on the basis of very sort of transparent operations, this will actually attract a sizable chunk of the investment activity that's possible around the mainland market or the Greater China market. And once sort of that's demonstrated as viable, it can only grow. But there are a couple of constraints. One of them is the transparency and the data issue, and the other one is the projects, the bankable projects issue, and projects that are generating high quality carbon credits. That's, I think, the biggest obstacle right now, and one that IFC and other DFIs are trying to solve.
If I can add, the cross-agency steering group, as well as the Hong Kong May grant scheme on the bonds, the green bonds in particular, I think as Hassan has highlighted about the Greater Bay Area, which is actually a growth engine, and we are part of Greater Bay Area and work closely with the other government agencies to promote green bond. And in fact, there's some green bonds already issued in the last, I think, 18-24 months, in particular related to Greater Bay Area. So through the subsidizing the bonds and the loan borrowers. So this is the government efforts as well.
Thank you for joining this discussion. I hope it will offer some food for thought in the run-up of the COP26 conference this weekend. And thank you, my fellow panelists and all the audience. I'll hand back to you, MC.